In this presentation, we're going to record a deposit from a customer that we put into a clearing account into the checking account. Let's zoom into it with Xero. Here we are in our demo company dashboard. Let's open up our reports as we do each time. So we're going to go to the accounting drop down. We're going to go down to our balance sheet report. When it opens up, I'm going to right click on the tab up top. I'm going to duplicate that report, so it's going to be on the right. Then I'm going to go back to the tab to the left, and we're going to be doing the same thing for the profit and loss or the income statement. Opening up the income statement or the profit and loss. We're then going to be right-clicking on the tab up top and duplicate that tab. So we have our major reports on the right-hand side. We're going to then go back to the left-hand side, and this is going to be where we're going to be doing our data input. I'm going to jump back over to the QuickBooks desktop just to consider our flowchart here. So if we think about our flowchart in the QuickBooks desktop, you'll recall in the customer section that we had the creating of the invoice. We created the invoice, increasing the accounts receivable. The other side going to revenue, income, sales, whatever you want to call it. Then we went to the receive payment where the money came in. And this is where we kind of have a question as to what are you going to do here? Are you going to put it into the checking account directly, which would be fine as long as it doesn't mess up the bank reconciliation process, the other side decreasing accounts receivable, or if you're going to have it deposited into the bank in some kind of grouped fashion, then maybe you want to put it into some kind of clearing account. And that's the other option. We set up some kind of clearing account. We did it both ways, but we have a clearing account now with 2 deposits in it that we want to then take to the bank, and that's the step we're doing now, and put it into the bank in one lump sum, even though there's 2 deposits involved. The purpose of that is that when we do the reconciliation process, it'll show up in our checking account in the same format as it will be on the bank account, and then the reconciliation should be easier. Now, you might be saying, hey, if there's only 2 checks, that's still going to be easy to reconcile. It will, possibly. However, there are situations where you have like credit card fees, possibly, where you have to really think about how this is going to work out, or else the reconciliation won't work. Or if you're collecting something like cash, then it can be really confusing to think about the deposits and how to group them. If you're just getting checks, again, you're fine probably to just put it into the bank account, scan them in there. They're going to show up in the same format on your bank account as in the system. That's great. And so that just depends on the kind of company that you're going to be dealing with. So we're going to go back over here to Xero. And our goal then, if we go to the balance sheet, and I'm going to pull this up because I, for some reason, went way out here in 2020. Let's go out to May 31st, 2020, and update that report. And then if I scroll back down, we have the clearing account of the $350. So there's the $350. This isn't an actual checking account. It's just a clearing account. I want to take it out of there and put it into the checking account, which for some reason in our example problem is overdrawn and therefore not an asset, but a liability down here. Here's our checking account. It's overdrawn. That's why it's a liability. Hopefully that doesn't throw anyone off. But, that's our checking account. So we want to put it into the checking account, and we want to take it out of our clearing account up top. So to do that, I'm going to go back to our first tab. I'm going to go up to the plus button over here, and we have a transfer. So I'm going to go down to the transfer option. It's going to be going from the clearing account. So the checking account, it's going to be going from the bank account clearing, and it's going to be going to the checking account. So from the bank account clearing to the checking account, and it's going to be for the amount of, we said, was the 350.4, the amount that's in the clearing account. So everything in the clearing account, of course, if we're imagining we have checks on hand, cash on hand, whatever we have on hand when we go to the bank, we should take all of it and basically put it into the bank at that point in time. So I'm going to go back over here and say that we're going to say this is going to go 350.4. I think that was the amount, right? 350.4 that we're going to put in place. And then if we wanted to reference over here, we might want to reference the 2 items that are involved, basically the $2 amounts involved here in some way. So if I was to go into the detail with regards to the bank account, just so we can tie this information out if there's any questions in the future, we can pick up basically the numbers or the actual invoice numbers that it was applied out to. The invoice here being the same because we've applied 2 payments to the same invoice. So I'm just going to pick up the number 100 and the 250 so that we can kind of say the reference is 100 plus the 250. So one of them had pennies involved, 4.4. just to give us 250 just to give us a reference. So then I'm going to make that transfer happen. So now we have the transfer that went up in place. I'm going to go back then to the balance sheet. Let's update this report, which we can also refresh by up top, update the report. It's probably best to use the update button here rather than the refresh button, the update button each time to get that update. And then if I go back up, I'm going to go back to the balance sheet. So I'm going to go to the accounting balance sheet. I'm going to change the date once again. I'm going to go back up to, what was it, like May 31st, and then update. And then if we scroll back down, so now we see that the clearing account has now disappeared because it's gone. It's out of the clearing account at this point in time. And then if we go down to the checking account and go into the checking account, so the clearing account is back at 0. That's what it means when it kind of disappears. You can go to the GL and look at the detail from the GL if you so choose. You can still go into it and find the detail here. If we go then on this side, we're going to say that we have a deposit, and I think we put it in place for the bank transfer. Here's the 350. So now it's in the checking account. The point is now it's in our books at the 350.4, which is the same format that we expect to see it on the bank statement. Then when we do the comparison, we'll be able to just check it off very easily rather than having to do some addition and math at that point in time.